Hi, I'm Rajat, and on this channel, I'm going to help you take better responsibility of your finances so that you can build a better financial future. So, I get questions on Quora, so I'm going to answer them here so that I can provide practical, real life solutions to financial problems. So, Rajkumar asks, what are some smart ways to pay off debt efficiently and avoid falling into a debt cycle? Some smart ways to pay off debt. Well, first, you don't take as much debt as you can. If you have a credit line available, you don't maximize the debt that you can take. So if you need something, if you are buying something, don't maximize your debt. Let's say you're buying a car worth 8 lakhs. So it doesn't mean that you have to take a debt of 8 lakhs. If you can afford to, you can pay a few lakhs upfront when you are purchasing, say 3 lakhs, and then you can take a debt of 5 lakhs. So that's going to help you not take on that much debt to pay off later. Second, you can negotiate with your lender. So if you're struggling to pay your bills, to pay your debt, and let's say you have a high interest rate of 14%, you can negotiate with your lender to lower that interest because you are having a difficult time paying those loans, paying those EMI payments. So let's say uh, you are really struggling to pay off that debt. So you can ask that this is the problem that I'm facing, and if things keep going on like this, I'm afraid I might not be able to pay off this. So you can negotiate that. Another thing you can do is there are some agencies out there who help you lower your debt by negotiating with those lenders on your behalf. So they are going to understand your financial situation and talk to those that this is my client and this is the situation, whatever it is, and they are going to negotiate on behalf of you and then charge a payment once you have completely paid off the debt. Third thing or fourth thing, whatever it is, you can do is you can take another loan with a lower interest rate and pay off the debt with a higher interest rate. So if you have a interest rate of 14%, you can take another loan with an interest rate of 8% or 9%, 11%, whatever, and you can pay off the debt with 14% interest. This way, you are going to lower your expenses every month as well as lower your overall debt. The last thing you can do, it really depends on your situation, but you can ask for debt from your loved ones, from your friends and relatives, either at zero cost or at least hopefully an interest rate which is lower than commercial interest. So if you are paying an interest of 12% and you can borrow money from your family or friends at say 6% or 9% or 8%, that's going to be much better. Another question is how to avoid falling into a debt cycle. Well, the first thing is very simple. Don't buy something that you cannot afford to pay. So if you cannot afford that mobile phone of say 80,000, don't buy that. Buy a phone of 40,000 or 30,000 or 15,000, whatever. First. Second is that when you are taking any kind of debt, make sure that you have enough cash inflow every month to pay off that debt completely and on time. So if you are just taking debt thinking that you have a credit line, you have good credit score, and you are hoping that you will be able to pay off that debt, hoping is not a strategy, and there are great chances that you can avoid that you can end up falling into that cycle. So delay your gratification and take a debt when you need to. Now if there is a situation when you really need to take debt, let's say there is a medical emergency and you don't have insurance or your insurance doesn't cover that or it has expired, anything, try to take a loan from or try to take a debt from people that you know, that people that trust you. So they are going to be favorable terms, and it's going to be flexible for you. Other thing you can do is always keep an emergency fund so that you are not forced to get into debt. If there is a situation and you need money immediately, you have a reserve of at least 6 months to meet that emergency. Maybe you lost your job, maybe something else happened, so you have a reserve for that and you avoid falling into that kind of debt. Third is pay off that debt. Yeah. So there is a thing known as foreclosure, which means that if you have a tenure of let's say 5 years, you are paying off monthly installment for the next 5 years, and your lender allows the option of foreclosure. It means that you can close it, you can pay off all the amount before the due date, before the maturity date. So if you have that spare cash with you, along with an emergency fund, along with funds to meet your regular expenses, go for it and close your debt. And yeah, I mean, it's not a way to avoid falling into debt, but that's certainly a way to avoid falling into the trouble of paying off debt. I hope that helps. I'll see you next time.